Welcome to the Opening Bell Report.
Imagine, if you will, a giant. And I don't mean the storybook kind, the one on the top of a beanstalk.
Cute.
I want you to picture a massive structural entity, something just colossal, that has effectively been frozen in stone for years. People have walked past it, they've looked up at it, they've seen its size, its potential, but it hasn't moved an inch. It's been dormant.
Right, just a statue.
Yeah.
And the market, it sees that size, but it loses interest. There's just no action. It just becomes background scenery.
Exactly. It's just there. But then imagine you're standing there one random Tuesday morning, sipping your coffee, and the ground starts to vibrate. At first you think it's just a truck passing by, but then one eye opens, then the other, and suddenly this massive thing doesn't just stand up, it starts sprinting. That is the metaphor for today's deep dive. We're looking at a specific analysis report that describes exactly this phenomenon, the giant in question, Immunity Bio Inc., ticker IBRX.
And based on what we're looking at, the ground is doing a lot more than just vibrating. This is seismic.
It certainly is. To set the stage for you, we aren't talking about some microcap penny stock. We're looking at a company trading around $6.93. But the headline isn't the price itself, it's the velocity. The report highlights an intraday jump of over 14%.
Right. And context is everything.
Yeah.
I mean, if a volatile tech stock jumps 14%, that might just be a normal Tuesday. But this analysis calls the move up. Parabolic breakout. It's recovering from lows of around, $1.83, and now it's aggressively testing $7. That's a huge change in character.
That's the key. Giants don't just wake up for no reason. So our mission today is to unpack the why. Why now? And maybe more importantly, is this just a sugar rush? Or is the giant really awake for good?
That's the multi-billion-dollar question. And the source material argues this isn't just market noise, it's a fundamental structural shift. We're watching a company transition from a speculative biotech,
Which is a very dangerous place to be.
a very dangerous place, into a commercial stage revenue generator.
That distinction, speculative versus commercial, that feels like the crux of everything. So let's rewind a bit. Let's talk about the sleep phase. What did that actually look like?
Well, from a Wall Street perspective, it looked like dormancy. The report explains that for years, Immunity Bio had this deeply impressive pipeline. They had the science, but, and this is the valley of death for biotechs, they had zero commercial product.
All R&D, no ROI, the classic trap.
Precisely. It was a clinical stage research company. You're basically selling a story. You're selling the possibility that one day your molecules become medicine.
And investors can only run on hope for so long.
Right. The report notes this dormancy was essentially the market waiting for some proof of life.
So let's talk about the alarm clock. What actually flipped the switch?
The catalyst was singular and specific. It's a drug called NKTV. The technical name is N803.
N803.
Yeah.
Okay, let's get a little technical here because our listeners appreciate the details. What is this stuff and what makes it special?
It's an immunotherapy treatment, specifically approved for bladder cancer. But to get why this woke the giant, you have to understand the mechanism. It's an IL-15 superagonist.
Okay, decode that for us non-PhDs.
Think of your immune system's natural killer cells, your NK cells, as the infantry, the soldiers on the ground.
Got it.
IL-15 is the signal that tells them to multiply and attack.
Yeah.
It's the battle cry. ANKTIVA basically supercharges that signal. It gets the patient's own immune system to destroy the cancer. And the report identifies the FDA approval and the launch of this drug as the absolute turning point.
It seems so binary when you put it that way. You're unapproved, you're basically worthless, you're approved, and you're suddenly a major player.
It is binary, and that's why the market reaction is so violent. Before approval, every dollar you invest is a gamble. It's a bet on if the data holds, if the FDA agrees.
High risk.
Very high risk. But once you get that approval letter, the whole risk profile inverts. It's no longer if. The tech is validated. Now the question just becomes how much.
So it shifts from scientific risk to execution risk.
Exactly. The report notes that investors are repricing the stock from that speculative tier to a high-growth commercial pharma tier. And that process isn't smooth. It happens in these huge leaps. That's the vertical line you see on the chart.
But let's be skeptics for a second. We have to be. We've seen biotechs get approved and then just flop on the launch. Just because you can sell it doesn't mean you are selling it.
That's a crucial point, and it brings us right to the section of the analysis called the fuel. Because you're right, approval is just the permission slip. The skyrocketing we're seeing is fueled by what the report calls explosive financials.
Okay, show me the receipts. Skyrocketing is a strong word. What does that look like in cold, hard cash?
Well, let's just look at the year over year. This is where the giant metaphor really hits home. In the sleep phase, so 2023, the revenue was about $1 million.
$1 million. For a publicly traded biotech with that kind of valuation.
The report calls it negligible. It's basically accounting dust. Almost nothing.
Okay, so the baseline is 0. Got it.
Now, let's look at the awake phase. For the preliminary full year of 2025, The revenue is sitting at approximately $113 million.
Whoa. Wait, let me pre-show. From 1 million to 113 million.
That is a 700% year-over-year increase.
That is staggering. I mean, usually when a growth company talks about aggressive expansion, they're bragging about 20, maybe 30%. 700% is just a different universe.
It is. And it fundamentally changes how you value the company. You can't use the same calculator. The multiples just explode. That's why the stock is chasing reality. It's trying to catch up to the math.
But I have to ask, is this just them stuffing the channel? Shipping a bunch of inventory to distributors to make the numbers look good? Or is this real demand?
The report anticipates that skepticism. It breaks it down quarter over quarter, which is vital. In the past, growth was flat or negative. But if you look at the most recent comparison, Q4 versus Q3, they're showing plus 20% growth sequentially.
So it's accelerating, not a one-time dump.
Correct. And here's where it gets really interesting, down in the weeds of the healthcare business. That 20% growth proves adoption.
Meaning doctors are actually writing the script.
It means doctors are prescribing Anketiva, patients are taking it, and maybe the most important piece, insurance companies are paying for it.
That's the golden ticket, isn't it? Reimbursement.
It really is. In the U.S. system, you can have a miracle cure, but if the big payers deny coverage, you don't have a business, you have a science project. The fact that $113 million is hitting the books means the reimbursement pathways are working. The report says this removes the single biggest risk of any biotech launch.
That makes perfect sense. You know the drug works from the FDA. Now you know the business model works because the checks are clearing.
Precisely. And that combination, scientific validation plus commercial execution, that is high-octane fuel for a stock.
Okay, so we've got the fundamentals. The giant is awake, it's working, and it's getting paid. Let's shift gears to the technicals. I know some listeners love charts, some think it's like reading tea leaves, but the report has a whole section on the technical breakout we can't ignore. What are the squiggly lines telling us?
The chart's basically just confirming the story. The report describes a setup where the stock had been consolidating for a while, just building energy between $5 and $6.
Consolidation, that's kind of like coiling a spring, right?
That's a great analogy.
Yeah.
Yeah. Imagine holding a beach ball underwater. The market's pushing down, but the fundamentals are pushing up. Pressure builds. And today's move to 693, that 14% jump, is the spring uncoiling. It's a confirmed breakout.
And the report mentions volume, too. Why does that matter?
Because volume is the truth serum. If a stock goes up on low volume, it could just be a few retail traders. It's flimsy. But the report notes high volume. This suggests smart money institute hedge funds are stepping in.
The big whales are buying.
It looks that way. Institutions usually wait for that commercial proof. They don't buy the dream, they buy the revenue. High volume on a breakout suggests real conviction.
Now, there's another group here who might not be so happy about this. The report mentions short sellers. This is always a spicy part of the story.
It is. For a long time, betting against Immunity Bio shorting it was a winning play. The failed biotech thesis was very profitable when the stock was dropping to $1.80.
Right. If you're betting it goes to zero every day with no sales is a good day.
Exactly. But now that whole thesis is being destroyed. The company has $100 million in revenue. It's obviously not going to zero. So those short sellers are in a very dangerous spot.
They have to buy the stock back to close their bet.
Which drives the price up even more. It forces them to cover. The report suggests this is just adding fuel to the fire. It creates a feedback loop. Price goes up, shorts panic and buy. Price goes up more.
The classic squeeze. Purely mechanical buying.
And that can be incredibly powerful in the short term. It's like an accelerant.
So we've broken past 6. We're knocking on 7. What's the next ceiling? Where does the report say we might hit our head?
The next major hurdle is the 52-week high. It's at $8.28.
$8.28. Why is that number so significant?
It's the line in the sand. Psychologically, that's where people who bought at the top last year might be waiting to sell just to get their money back. It's a natural resistance point.
But what happens if it breaks that, if the momentum carries it through 8.28?
Well, the report uses a really evocative term for this. It called it blue sky territory.
Blue sky. I like the sound of that.
If it breaks 8.28, it enters a zone with no historical resistance. There are no bag holders left above that price waiting to sell. It's just open road. It implies price discovery is starting from scratch.
It sounds exciting, but we always have to look ahead with a critical eye. What's the destination, the future outlook section? What are the other analysts covering this saying? Are they buying the hype?
It's honestly rare to see this level of alignment. The report says 100% of covering analysts currently have a strong buy rating.
100%. That's unanimous. Usually you have at least one contrarian in the group.
It is unusual. There doesn't seem to be a descending bear among the major analysts right now. The consensus is entirely bullish.
And what are they targeting? If we're at roughly $7 now, where do they see this going?
The average price target listed is $11.73.
So quick math, from 7 to almost 12, that's what, about a 65% upside from here?
Right, and that's the average, the base case.
Yeah.
But if you look at the bull case, the best case scenario in the report, the target is $25 plus.
$25, that's more than a triple from here.
And that bull case is predicated on the revenue continuing to double or triple annually. If they can keep this up, $25 becomes a justifiable number based on standard biotech multiples.
That brings up a question, though. We've only talked about Anketiva for bladder cancer. Is this company a one-hit wonder? I mean, if that market gets saturated, does the growth just stop?
That is the critical question for long-term value. But the report addresses this. The answer is no. The giant isn't just one drug.
What else is in the chamber?
They're leveraging the platform for other cancers. Specifically, the report calls out lung cancer and pancreatic cancer.
Pancreatic cancer. Wow. That is a notoriously difficult one. The survival rates have been stagnant for decades.
One of the hardest targets in oncology.
Yeah.
But this is where the mechanism of Anketiva, that superagonist, gets so interesting. The biological hypothesis is that if you can activate the immune system to attack bladder cancer, you can retrain it to attack other solid tumors.
So Anketiva isn't just a product, it's proof of concept for the whole platform.
Exactly. It validates the whole mechanism. The report views the current bladder cancer revenue as just the first stream. It's the tip of the spear.
And if they even get a foothold in pancreatic cancer?
If they show real efficacy there, the market opportunity multiplies exponentially. We're not talking hundreds of millions anymore. We're talking multi-billion-dollar markets. That's what underpins that $25 bull case.
It's a fascinating setup. You have the immediate cash flow from the current launch as a safety net, and then the lottery ticket potential of the pipeline.
It's a potent combination. Usually you have to choose a steady pharma company with low growth or a risky biotech with a pipeline but zero revenue. Immunity Bio seems to be right at that inflection point where they have both.
Okay, let's wrap this up. We've covered the science, the money, the charts, the future. The summary verdict in the report really boils it down to 3 drivers. Let's recap those.
Sure. Reason 1 is validation. The tech works. The FDA stamp of approval ended the if.
Right. It's real medicine.
Reason 2 is execution.
Yeah.
The sales team is delivering. You don't get 700% growth by accident. They're getting the drug to doctors and getting paid for it.
And reason 3.
Momentum. The market is just playing catch up. The stock was priced like a dormant statue, and now it has to be priced like a success. That gap is being filled very, very quickly.
So for you listening and watching the ticker, what's the key thing to look for right now? The report had a specific call to action.
Yes. The specific level to watch is $7. The report advises watching for a hold above 7.
Why is holding that level so important?
Because touching a level is easy. Staying there is hard. If the price can break 7 and then stay there, if it becomes the new floor, not the ceiling, it confirms the breakout is real. According to the report, if it sustains that, the rally is likely just beginning.
It's the difference between a spike and a trend.
Exactly. We want to see it build a base at 7.
Well, it certainly feels like we're watching a pivotal moment for this company. It's rare to catch a giant right as it wakes up.
The revenue jump was the alarm bell. The market is just now hearing it ring.
I want to leave everyone with one final thought to mull over. We talked about blue sky territory. Think about this. The company's revenue jumped 700% just by waking up, just by standing up. What happens when it actually starts to sprint?
That is the $25 question, and with that pipeline, the sprint could last a very long time.
The dormant phase is over. We'll be watching that $7 level closely. Thanks for diving deep with us today.
Always a pleasure.
Don't forget to like, share, and subscribe for more.